So my background basically is that, as Nick quite rightly said, by training actually a journalist. So I was a series producer at the BBC, did all the business programmes at the BBC. So I did the Money programme, Lord's series of Dragon's Den, and all those kind of big alleged business programmes, or they ended up turning into entertainment. So we launched all those, and I've always been a business journalist. I'd left the Beeb about 10, 15 years ago, set up my own media companies, and I've built 2 or 3 media companies on. And so the reason for telling that story is it gives you a bit of background. So I've always been a business journalist, but I've always run businesses. And so I've built up and sold on 2 or 3 businesses. And I could absolutely echo what Nick says. You know, the problem in terms of early stage funding for business is absolutely huge. When I first set a business up about 8 years ago, which was a viral video agency, we used to do all those ridiculous viral videos. I can remember going into my high street bank manager and saying, we've got this problem. We need to fund a bunch of productions that are coming through. We're pretty sure we're going to get some revenue at about 9 months' time. We need money for about 9 months. And I can remember the bank manager looking at me as I was a freak. And it's like, sorry, Mr. Steve, we don't really do that. It's not the kind of thing we do any longer. So I started really following this sector in great detail then. And then saw a business opportunity. So along with my colleague Ryan, who's here, we set up a business about a year ago called Altfi. And so we cover the whole sector from a trade point of view. So we're effectively the in-house publication for the whole alternative finance sector. And we're also launching a proposition in about a month's time aimed at businesses such as yourself called the Funding Centre. Now, the reason I'm here today, though, is because I think that we're at an interesting interval, an interesting juncture, which is why we set our business up and why I'm here to talk to you. And the juncture we're at is that, as Nick quite rightly said, you know, the banks were really never ever there really for startup businesses. I don't know your experience, but if I was a startup business, I wouldn't go talk to a bank. I bank with Handelsbanken, who are a very good bank, a lot of time for them. The thought of, you know, Handelsbanken giving me any money is just laughable. I had to sort of negotiate an overdraft whilst, you know, having to give a mortgage on my kids to get about 5,000 from them. So, you know, that's not what banks do. They've never done it. And in my years as a business journalist, it became obvious that venture capitalists also don't fund businesses. My experience, venture capitalists would really only fund a business if it got to about £5 to £10 million in turnover. And in between there's an absolutely huge gap of businesses. And that's that growth capital that is needed for businesses. And traditionally, really, we'd have nowhere to go. There might be informal networks of angels in existence. I've been involved with the big London Angels network for a while. But in reality, I don't know if you've ever been to any angels events. You know, you go to enormous effort, you do your PowerPoint presentation, you stand up, and then everybody claps and come up, people ask you lots of interesting questions at the moment, and you raise zip all. Because actually, the angels never invest a single penny in anything. So, but they come for the tea and the coffee. So I'm very dismissive of angels, you know, very dismissive of VCs. I actually have a lot of time for private equity, which is a frightening and terrifying admission. But actually, private equity does put their money where their mouth is, but you have to be a bigger company. They really won't negotiate much under about 10 or 20 million pounds. So that leaves a huge gap, which the whole alternative finance space is now filling. And I can tell it like it is because we are covering it. We're talking to all the platforms, and there are 3 really interesting things happening out there. The first thing is that the government is behind it. You know, I always have a good laugh, a chuckle when Ronald Reagan used to joke. He used to talk to the Republican convention. He used to go, "How many times do you hear, 'I'm from government and here to help you'?" No. But actually, in this case, they are here. And the message that we're hearing is that government is really keen to make sure the alternative finance sector booms. I talk a lot to the players in the sector for the big platforms. And the message that's coming down is that Treasury really wants to make sure that there are rivals now to the big high street banks. They're making sure it's going to happen. So the rules that would, for instance, stop people, ordinary investors, from putting money into ISAs and SIPs for what we'll find out in a minute, peer-to-peer lending and crowdfunding, those rules are changing. Treasury is effectively telling everybody, clear the level playing field, make sure this stuff happens. We want, by the middle of next year, to have some sizable players funding businesses, and they will be alternative finance platforms. So that's that. There's a fair wind going behind it. Government is really behind this. And so are all the political parties, without an exception. The next big thing that's happening out there is that, and this is really interesting for you guys, you really need to listen to this carefully, there's a flood of investor money coming in. Most of the big platforms, so the big three platforms in terms of pure liquidity are probably Zopa and RateSetter in the consumer area, both of whom have started lending to business, and Funding Circle. But as Graham's here from Funding Night, there's and ThinCats and Assets. There's a growing number of these platforms. But if we look at the amount of money that's flooding into the sector, the institutional investors are now piling in. So I'm aware of about £350 million raised in the last 4 months alone which is going to 3 or 4 of the big platforms. And we're now in a very odd situation whereby there's actually too much investor money and too little origination, which is you. So actually, most of the platforms are desperate to lend money because they've got institutional investors knocking on the door, they've got private investors who are looking for a higher return from their cash savings, and they actually need to get the money out the door. They need to deploy. So there's an origination issue going on here. And in fact, in America, it's even more bizarre. The big American platforms, there's a couple of big platforms called Prosper and Lending Club, which are mainly consumer-based. They've actually just closed their doors to investors. They don't want any more money. You know, they've got too much money. They don't know how to deploy it. And there is a wall of money coming its way, okay? There's a wall of money coming its way in the UK and the US. I talk to institutions all the time, and they've all worked out that the traditional forms of income-orientated investment, which would be corporate bonds, that market's tapped out. Basically, yields are at rock bottom. There's the deals, the covenant deals that are going on, debt deals now for big corporations is shocking and scandalous. I mean, effectively, it's kind of like, I'll borrow some money and I may pay you back. Maybe I won't. It's not quite that bad, but really the covenant terms are terrible. And it's an awful deal for institutional investors. They want to invest money in peer-to-peer loans to business. So that's the second juncture. The third juncture, and I think this is really important, is that we're seeing a proliferation of platforms out there now. And the platforms are beginning to address very, very identifiable needs. So if we look at the ecology, or sort of the ecosystem of a financial requirement for a business, we've seen 2 traditional buckets of financing, which is equity. So one of our colleagues here is going to be talking from CrowdCube. We're going to talk a bit about crowdfunding equity. Equity serves a purpose. It gets a business up and running, and it gets that business to a point at which hopefully it's beginning to generate quite sizable revenues. And then businesses traditionally would need anything between 1 and 5 year money, possibly a bit longer, occasionally a bit shorter, which is to basically really build up their working capital requirements and move forward. So those are the 2 main areas that at the moment the market's dominated on, and we're seeing a profusion of platforms in both of those opportunity sets. So CrowdCube and Seeders, particularly in the crowdfunding equity space. Syndicate Room is also doing some interesting work with angels. And so you're seeing that group over there. And then you've got peer-to-peer loans with businesses. You've got Funding Circle, Funding Night, Assets, ThinCats. And there's a long tail of platforms beginning to emerge behind them. And then you've got the kind of distinction between secured lending that operates in the business space, the business SME space, which quite frequently be off assets or property backed, and unsecured. So you're seeing the emergence of more and more platforms, but the really interesting bit is that you're beginning to see niche strategies emerge. So Ryan and I, we quite often meet a lot of platforms as we go around, and we're beginning to see more and more outfits doing things like trade finance. Funding off invoices is becoming very successful and very popular. And again, those guys need origination. You know, they've got every penny they ever need and more 5 times. They need product, which is you. And they can't get them. They just can't get them because people go, what is alternative finance? Who are these platforms? You know, the public awareness, the brand awareness of the whole space is so low, and we've done some work on it, and we suggest that probably no more than 5 or 10% of SMEs probably know it's even out there. Actually, they need you. So we're seeing niche categories emerge. Trade finance is becoming, in particular international trade finance is becoming fascinating. We're seeing more and more businesses now beginning to plug into the trade finance networks. Fascinating company I saw recently is funding, not relevant for this audience, but is funding third world businesses selling into the first world. And I'd always thought that big outfits like HSBC did that kind of trade finance. Nope, they don't. And these guys are now building a fantastic business. In America, we're seeing a thing called merchant credit services, which is effectively a form of short-term funding emerge as a big sector. And the area that I think will probably the most fascinating sector, there's already a business out there called Archer who are doing it, is what I call short to medium term funding, which is sort of 3 to 15 months. Because in my experience, actually, the single biggest requirement quite often is in that 3 to 15 months stage, which is you need some working capital. Traditionally, you've probably got a lot of business coming in. Something's going right. You're selling, but you've actually got to employ the people to do the work and buy the products in, and it's that kind of working capital requirement. You just got to get the business across the next stage. And traditionally, in my experience, the banks have been pretty pathetic in that area. Occasionally, they'll give you an overdraft as they're secured on your children's future. But in my experience, it tends to be very good. And they're beginning to see people emerge in that space too. And then you're seeing even more specialist versions where they're putting together crowdfunding equity and they're putting together debt structures. We've seen the first version of the convertible come out, the convertible equity structure come out. We've seen mini bonds come out from Crowdcube. So there's some really interesting products emerging out there. And so my sort of really big message here, and then I'm going to shut up because I think you're going to hear the people who actually do the business on the platforms, is that within the next 3 to 4 years, we have a data business that tracks the flows in the industry. This industry at the moment, in total, crowdfunding equity and peer-to-peer loans, is worth about 1.6 billion in total transactions. That's total business done to date. And that includes look back. So that includes business that's been booked and is probably already working its way through their platform books. So you're probably looking at origination of, in total, probably what, 100 or 200 million pounds a month would be my kind of cigarette packet guess. Within 2 to 3 years, that figure will probably be 1 billion to 2 billion origination a month. And the total aggregate pie will probably be close to 10 billion. The growth rates are 10% a month for most platforms, and some a lot more than that. And that means that they need to lend, and they need to provide equity. And they need to do it now, because it takes still a while to get the applications in and get funded and go through the process. You've probably got to take a few months to get all your business plans and proposals together so it's in ship shape for the platforms. And now is the time to strike, because this is the last message, is with my economics training, one thing tells me when you have a big demand for money, for investors' money to get to work on platforms, and not enough supply, which is you, the borrowers, if we look at it in the inverse way, the price of credit goes down. That is what's going to happen, which is at the moment, if you go to a lot of platforms, they'll probably be quoting you, well, in a range, depends upon your risk quotient, 6 to 15% if they were lending money 2 to 3 years. I mean, Graham from Funding Night, I'm sure will go through this kind of stuff. I foresee a situation whereby there's so much money coming into the sector that rate will start heading down to the bottom end of that curve. So you're beginning to look at 6 to 7 to 8%. At that point, that's competitive money, and that's what the banks would probably be charging you anyway. And you don't have to put up with the bank managers breathing down your chest all the time. So it's a really interesting space, and the cost of credit is going to come down. And all the platforms are competing against each other, so all the fees that go into it will also come down. So if I was a businessman looking at the space now, I'd be thinking, next 2 years, this is the sweet spot for the alternative finance sector. So at that point, I'm sure we're going to have some questions and answers later. I'm going to hand over. You can hear from the guys who are actually running the platforms. Nick.